So we have written down, go to the 4-hour time frame, understand if the market is bullish or bearish, take out your Fibonacci tool to match either a bullish or bearish market trend. Okay. Then you're going to look for the golden zone area, which is between the 71.8% and the 50%. Okay. Another confirmation tool that you guys are going to use or can use are moving averages. I love moving averages, guys, because that tells me more of which way the market is flowing. Okay. So the first one I want you to write down, guys, is the 1500 moving average. Okay. The second one I want you to write in, guys, is the 800 moving average. The third one I want you guys to write in is the 200 moving average. The fourth one is the 100, and then 80, and then 50. Okay, guys? So these are the moving averages here that you'll see, guys. Okay. So let me go down a time frame because we all like to look at the 1-hour time frame, especially with Rich's Liberty strategy. Okay. So here we go, guys. I'm just going to remove the Fibonacci real quick just so we can all see. Okay. So as you can see on the screen here, guys, there's a bunch of lines, right? Kiki loves to call me Picasso because of these lines. These are where I look for certain indications, guys. So this orange one down here is the 1500 moving average. This yellow one is the 800 moving average. This white one here is the 200. Purple is the 1. Green is 80. And blue is 50. Now, you guys are saying, okay, Gabriel, what are you looking for now? Now, what I'm looking for, guys, is confirmation that these candles are going to start breaking underneath each line. Okay. That's what I start looking for. So right now, if you notice, I'm going to zoom out a bit here. So for this sell, for example, when you're looking at your charts, guys, I want you to get into the habit of looking to the past because the past is going to tell you what the future holds. Okay. So we're going back to the past. This is called back testing. And if you look here, guys, it was staying on top of the 50 moving average, and then it started making its moves because now all these lines start getting tight together, and this will give you the clarification of when you want to get in. Okay, so me personally, when I'm looking at this, especially on the hour chart, I'm looking for indications like that of the candlesticks starting to break underneath my moving averages. So look, here's the 50. It was on top, but it started getting all tight together with the 180 and the 50 moving average, and the candle started staying underneath. Okay, and then it's finally made its move right here. See that? It made its move and broke completely underneath. Now, the next clarifications of it carrying down are the 200 moving average, which is this white line here, guys. Okay, so it broke. Okay, retested back up, but it didn't break through the lines again. It stayed underneath the 200 moving average and started continuing its way back down until what did it do? It got close to the 800 moving average, but decided to make its way back up. So there's a little tip that I want you guys to learn because I believe it applies for NAS as well. The 200 moving average is like the middle point for the market. Okay. The market will always retrace back to that 200 moving average because it misses it in a way. The market misses that average zone because that's the middle point, right? And it will make its way back to that point, whether it's in a buy or whether it's in a sell, right? So as we can see here, it breaks through the 50 moving average, which is this blue line. Okay. It pops on top of the of the 80 moving average, and then it stays on top again of the 100 moving average. And then it plays around in consolidation a bit with the 200 moving average, but it finally makes its move and says, ciao, I'm out. I'm going to start making my way up here. But now, guys, because gold has hit an all-time high right now, and looking back at the past and repeating when it hits an all-time high, normally what it did in the past was it retraced its way back down. So this is where the 800 moving average comes into effect now, because for me, that's where the market is going to start heading its way down to. Okay. This is why I'm a huge advocate of our services and applying my personal strategy to it and utilizing it, guys, because now look at all these points of Rich's strategy where it says to get in, and it all works. So I'll start on the 4 hour. I'll see which way the market is moving. I'll check my moving averages. This is where I start moving time frames down. Okay, guys. So I'll go down to the hour time frame. I'll see now which way, how close am I to my averages now, because if you notice, the averages start getting closer. For me, I'm looking for gold to sell. I'm not going to lie, for a little bit, because I was looking back at the past and there is a gap here in the market. You see this gap right here, guys? There is a gap and it needs to be filled. For me, this is why I'm kind of seeing more of a sell, and my indicators are picking up on it as well, right? Because that space does need to be filled. It's just when, right? That's the whole thing. And this is why we break down the charts. So I'll go from the 4 hour to the 1 hour. I'll go to the 15-minute. Okay. And what will I do, guys? I will break out my good favorite tool again on the 15-minute time frame, the Fibonacci tool, and I will mark the previous high to the previous low, and I will wait for my zones again. So when all these, if you notice now, from the 50% to the 71.8%, my indicator lines are all pairing up to each percentage. Now, the cool thing about Fibonacci, guys, it's a tool that that measures, what's the word? That measures emotions. Okay. So the market, when using Fib, look at it as emotions. Okay. So if it's going down on a downtrend, you got to think the buyers are being really emotional. So their anger scale is going from 0 to 100 real quick. Now, the whole question is, are they going to take over the market, or are the sellers going to take over the market? And that's where certain indications come into effect. Okay. And that's where I'll wait patiently for certain moves, because for me, patience is key. I like to wait for, especially with gold, I like to wait to 2 to 3 touches on a certain point for me to take a buy. So for example, see this 71.8 right here % on the Fibonacci, which is this blue line. I tend to wait for like 1 to 3 or 1 to 4 touches, depending on how the market's moving. Because right now, usually on Mondays, the market is in consolidation. It's one of those things where it's just picking up where it kind of left off, figuring out where it wants to move on Mondays. And then Tuesday is where it makes its full-blown move. Okay, that's where it's like telling you, okay, the market's going to be flowing this way this week. So I look for 3 touches. So as you can see, here's one. This was a clear indication. 1, 2. And then this was the third move here. Why was this the third move here? Because this candle up here, guys, did not surpass the previous high. Okay. But what did it do? It stayed. It it stayed on top of the previous low, that's for sure. So it made its way up and it broke down, but did not break past this previous low. And if you look, it stayed on top of the 71.8. This is where you can sit on your hands, okay, and have your setup for a buy at the 61.8%. And your stop loss is going to be just a little bit past the 100%. Okay, so if we do this from here, let's just say from here to here, you'll be risking 0.3 or 0.4%. You're not even risking 1%. Okay. And then make your TP, obviously, just a little bit past the zero. And then you're set, guys. But now what you have to look for is, see this third touch here? If this third touch did not break on top of the 71.8 and broke underneath it and went down and retested back up, you'll be getting in at the 85%, okay, which is this orange line for a sell, okay? Because now it broke this line here, which is I call it the floor. This is pretty much like a floor. Here, I'll clear all this stuff so you guys can see it more clearly. So this right here, guys, is like the floor, okay? Let's do this, okay? So if you look at this, this is like a floor right here. And then this is the ceiling, okay? So now from the 15-minute time frame, this is where you could go to the 5. And now you have a bit more of an idea of how the market is flowing. So if the market breaks this point here, this area here, you already know it's going hard into a buy. But if it breaks, now say the market now starts going down this way, right? It's going to make a move that's going to pass this like that. And then this is where you guys would get in for the sell. We'll go like this. That's where you'll hit sell. And then it'll start going down this way, down to where? That 1500 moving average right here, this orange line. That's just a little bit of what I look at, guys. I look for highs and lows on the 4-hour time frame, and then I just start breaking it down, right? And I look at my indicators to give me confirmation to see which way the market is actually going to start moving, right? So like I said, if this, so let me go down to the 1 minute now. So the 1 minute, guys, is where I will start placing my entries, okay? So I'm just waiting now to see. So as you can see, like, here it is, guys. Here's Rich's strategy. It didn't break. I'm just waiting to see now if it breaks on top of his Asian range or is going to continue to start falling now to my 800 moving average. I'm just waiting for confirmations to see if it stays on top of this 200 moving average right now at this point, or break underneath it and start making its way down to the 800 and to the 15. But even with Rich's strategy on the screen here, it's giving me sell ideas. But another person, guys, that I really like to use this strategy as well, especially for that person who doesn't like really know where to get in for entries. Armin's indicator, this gives you entry points, guys. And it's honestly, it hits crazy, especially if you know what to look for. And these are certain zones, guys, that I'll also look for. But if you notice, my moving averages pair off very nicely with Armin's as well. Armin's strategy, right? This is why I love this company, guys, because I actually have traders that see the markets the exact, like the same way that I do, right? Because I think that was my biggest issue, was trying to find people that like see the market like how I do, right? I've had people say, man, I don't understand your chart. It makes zero sense to me, right? Like all I see is squiggly lines, right? But when you have amazing educators that make things simple in a way that pair off nicely with what I've been looking at, that I understand, it makes trading so much more fun and easy, right? And if you I think it's gonna sell right now, guys. Honestly, I'm not gonna lie. I'm looking at this. I'm not gonna get too trigger friendly yet. So, like I said, I'm waiting for my indicators. I'm really waiting for this to these candles just to start breaking underneath this for a full blown confirmation of a buy or sell. But I'm going to show you guys. So I'll go to a different pair and how these indicators pair off with different pairs, right? So let's go to this. Let's go to Euro USD. So do you guys see now the market flow of how it's different now in a like a seller's market in a way? So do you see how all the candles are now underneath these moving averages? The way that I like to tend to remember it, a sell, if you use my colors here, guys, I go white, purple, green, blue for a sell. So see how it goes white, purple, green, blue. That's how like little tricks I like to use to like remember, okay, it's going in a downtrend, right? And then for a buy, just reverse it, right? It'll be white, purple, green, blue, like how you saw on gold. So see how it goes here, white. Let's get a better analogy here. So here, white, purple, green, blue. That's how I do it, guys. Okay, so I wait for certain points for like all these strings to kind of bunch into one little strand, and me looking at the candles and seeing if they're either like this, falling underneath, or reverse, carrying on top for a buy, like how you see in gold here. XAU, USD. So see how it's like this now? But I will wait, guys. I like I said, I could trade every day and take like every single scalp, but I've come to a point now where I really wait for quality trades because those quality trades are the reason why I'm getting the results that I'm getting, right? I know a lot of us want to hit that bag real quick, right? And be balling out like tomorrow or yesterday, right? But it's a growing process. It's a compounding process because think about it. You're making $100 today, $100 tomorrow, $100 the next day. You're already up $300. Just make it two more times. You're up $500, and you didn't really have to do much, right? Or you could take that one solid quality trade, hit that bag, and not trade. But if you do get that little bit of like, okay, here, I think it's still going a bit, low risk, do the least possible risk possible. Because why do you want to risk all that money that you just made, right? I've seen people make $5,000 and lose that $5,000 like that because they didn't want to change a lot size from a 0.5 to a 0.01. It's little things like that, guys, that will increase your skill set and knowledge in trading too, and your bank account, right? A lot of people think that like $100 now is nothing. I don't know about you guys. $100 fills up my gas tank. It gets me food. It gets me to nice restaurants. It gets me to Go Place to relax all day. If you're in Toronto, if you've never been to Go Place, I highly recommend going. It's very relaxing. But like that's what I mean. For me, trading started off with paying a bill. I mean, it started off legitimately with my phone bill. I'm like, okay, how can I make $56? That's my goal. Let me make $56. Once I made that $56, I pull that out. That's my money for my phone bill. Okay, what's my next expense that I could utilize this for? Insurance? Bet. Is it $250 to $400? I know I can make that because I just made that, right? You follow the rules that we give you. It's a no-brainer. I think one of the best things that I've learned, and it was recent, was hit one or two stop losses a day and you're done, right? You're finished. And also don't put all your eggs in one basket. You don't have to use the max lot size on a trade. Think about it. You could, if you're on the 10K challenge, you don't need to drop a 0.1. You could drop at least what is it, 10 0.01s and get in multiple positions, right? Think about it. They say enter at this point for a buy, but the market starts going down. If you use that solid 0.1 on that 10K and it just gets going, your heart flutters a bit because you got at that end. But if you just do like a 0.1 or 2, right, but it starts carrying, you're kind of okay. And then you enter again at a 0.1. Your risk is less because now it's getting closer to your stop loss. So you're not going to be getting close to your daily loss, right? It's little tricks like that, guys, that will make you succeed. If you don't have, say you're out and about, you take that trade, right? But you're that kind of person that needs to look at your phone and watch this trade, but you're busy at work. If you're that concerned, man, move your stop loss to entry. So even if it hits, you're still either in profit or you're break even. It's things like that. Why do you guys want to see a negative? It happens in the account, sometimes, because it will either just shoot down in a certain way, but at least you have your proper risk management in, and you're not going to lose your whole entire account, right? But if you're out busy and doing things and you can't fully focus on the screen, just do that. Move your stop loss to entry. If it hits it, it hits it. Guess what? There's always tomorrow. You can always jump into the markets again. The markets aren't going anywhere unless it's the weekend. But if you trade Bitcoin or anything like that, you're good. You know what I mean? So these are things, guys, that you need to focus on. Focus on your daily goal, your weekly goal, your monthly goal, and your yearly goal. And how are you going to get to that, right? For me, I'm good with making $100 a day. But my end goal legitimately is $1,500 to $2,000. Once I hit that, I don't need to trade. I don't touch my trading account. I don't even bother. I have multiple accounts. So if one account's good, then that gives me the opportunity. Okay, now I can start growing this one, right? Even if, guys, I know we all have a funded challenge, right? We all got it when we all signed up. You use that one for proper, like, grow that. But have one that's $100 and from 100 to 250 and just get comfortable with that 0.1, especially if you're new. That 0.01 is your best friend because that's going to build like very good discipline. It's going to get you out of bad habits, and it's going to get you seeing realistic numbers for a time period, because that's what I started on. I was happy making $3 to $10 because I'm like, oh my God. Because if you just change that lot size, that $10 is 100 or 1,000. You know what I mean? And once you start understanding that, sky's the limit. All right. Especially passing these funded challenges. You stick to your game plan and the rules and stick to what's taught here, guys. There should be no reason for you guys not to succeed. All right, guys. Thank you so much for taking your time and getting on this call. I appreciate you guys.